Hey there, everybody. It's Trisha with Easy E-mini Trade, and I know you haven't heard from me for a while, but everything is good, and I hope it is with you guys as well. I just want to show you a couple of the Slinky advanced techniques. There's quite a few ways to use these, and I'm going to go over those on Thursday evening, February 11th at 7, doing a webinar. If you want more information on that, just go to easyeminitrade.com and click on the webinar tab at the top of the page. So I'm going to go over a couple more aggressive techniques for entry, and they are a little more on the risky side, but after you trade for a while, you tend to get a good feel for the market. So anyway, a lot of you will find these really helpful in quite a few different ways. I know the market's been crazy fast lately, and if you're having trouble getting in on a smaller framed size chart, then use something bigger. If it's that fast that you can't get your order in fast enough, not to worry. There's always another trade right around the corner. And if it's that crazy wild in the morning, chances are good that the afternoon will make for better trading. Also, pre-market is pretty nice trading as well. I would just urge you to make sure that whatever you're trading has enough volume to trade pre-market. CL is nice pre-market. YM actually can be nice pre-market. NQ can. If you're going to trade the NQ or YM pre-market, make sure that you don't load up with a ton of contracts because you're going to find yourself in trouble. So you're realistically not going to want to trade, probably more than one contract. ES also pre-market is pretty decent. Okay, so with that said, let's show you a couple of these real quick. This is the 8 range chart on the left. This is the YM, and on the right is the 4 range. So I'm using the 4 range for my entries because that's what I like. And what I do is I look at the 8 range for confirmation to take it. And I'll go over all this. This is a regular old Slinky setup, same indicators. You don't have to do anything differently. And what this is called, this is a Dipsy Doodle. That's the name Gordon gave it. He's in my room, and he always comes up with some creative names. But anyway, we've got our double stochastics here that we use for our confirmation for taking our Slinky trade. And so basically we're looking for a green line to be below the red line, simply put, to take shorts for the Slinky, and then the green line above the red line to take buys. And there's an exception to that, and I'll go over that on Friday. But anyway, when you see this faster line come up and almost kiss that slow line, that's usually a really powerful signal to take a trade in that direction. That direction meaning if the green's under the red, you're looking for shorts. So when this comes up and almost kisses that, if you can find a way to get in short, perfect. And this time it just so happens that there's a Slinky setup. It doesn't necessarily have to be a Slinky setup that you're taking when you see this Dipsy Doodle, and I'll give you more examples on Thursday evening. But when you see this, it's usually, kind of, load the boat type of trade, load up and take the trade. So that's really powerful. Another one we've got here is a lot of times I love divergence trades, and a lot of times people are a little scared of them because they're not sure what to do. The easiest thing to remember is that when you're taking divergence trades, you want to be at a resistance area when you're taking them. Now, you can take divergence trades at the high of the day and the low of the day, and of course, you run the risk of it not pulling back very far and then taking off opposite the direction that you're looking to take the trade. But right here you can see on my 4 range chart, I've got divergence here. I've got higher highs on price here than here, and on my stochastic I've got lower high here than here. So that's telling me it's probably going to pull back. And obviously we don't know how much it's going to pull back. Is it just going to pull back and hold the super trend stop? And you still might determine that there's enough space for you to still take the trade even if that were the case. But when I look over here at the 8 range, I can see I've got divergence on this 8 range. And I'm looking at the green stochastic line here. So I've got higher highs in price here and actually here, while I've got lower highs on my stochastic. And this is at the same time that I am getting a Slinky set up. Now, technically speaking, this would not be a valid Slinky setup because our red line's in overbought. So for the Slinky, if we're in overbought with our red line, we're still looking for buys. However, with this 8 range giving us divergence, I'm fine to take this trade because I have a pretty good idea of where it's going to retrace to. This is a 90 EMA, and if you're not familiar with the 90, and this is a 200, some people like 80, whatever you like, but on a larger moving average, you can usually expect price to find its way there and hold as support and resistance. So in this case, you can see I've got all this distance here. So with that divergence on that 8 range, confirming that this is probably going to pull back off the high area here, then I'm all over this. I can take this, and like I said, I would use this 90 EMA as my target. So that's another powerful, more aggressive entry. And then another one is, I don't have a name for this, I'll have to come up with one, but you can see on my 8 range chart here, this is the NQ, 4 range on the right, 8 range on the left. You can see we've got this distance between our slow stochastic and our fast stochastic here. And the distance is more than 40 points. 40 points meaning that this is up here, let's just say it's at 80, and down here this is at like 35 at this point. So we've got more than 40 points between the two. When you see that, the chances are good that the stochastic here, the faster one, is going to find its way back down to the slower one. And the only way that's going to happen is obviously price is going to need to move lower because the indicators are obviously based on price. So when I have this right here, this 40-point difference here between the two moving averages, on my entry chart over here, I've got this pulling back to that 90. And this also telling me that I've got divergence on this 1-point range chart. So I've got equal highs on price right here. Well, I've got a lower high here than here on my stochastic. So I'm thinking, okay, I'm going to short this because I've got that 40-point space on my stochastic confirming that this is probably going to pull back. So you can go ahead and take it as a divergence trade, or if you wanted to wait for a break of the super trend stop, you can take that. Even though this chart does not agree for the Slinky short because our green line is above our red line, the fact that we've got that much space between the two, the chances are good that this is going to move lower. So I hope that helps you guys. I know I'm not giving you a whole lot of information there. This is just a short little video, but I will go over everything in more detail on Thursday at 7. So I hope you all have a fabulous day, and we'll talk to you soon.